Joining us for a closer look at what's playing itself out in that market scene is Nick Kunze from Sanlam Private Wealth. Nick, a pleasure. Good afternoon. Not a bad Friday at all. Maybe let's take stock of the week that we've seen, as well as what markets are contending with today. Hi, Nick. Can you hear me?
I can. Sorry, do you want to repeat that?
All right. I was asking about just taking stock of the week that we've seen, as well as markets and how they're performing today.
Yeah, I mean, as you said in your intro, lots of green on the screen. I think certainly recession fears have been subsiding a little bit out of the States. We had a really strong retail sales print yesterday, which sort of set the bulls going. And I think also a little bit of calmness, geopolitics. In fact, if you actually look at the subsiding and the volatility, if you look offshore, what's happened to the yen, sort of calming down a little bit. In fact, at the close last night, all those major global indices are actually up on the month, which is actually quite extraordinary. But we'll take a green day like today.
I want to speak about as these, recession fears start to wear off, because of course we're also hearing about this huge market correction with specifically tech stocks responding to the fact that the U.S. economy may be weaker. What now? Was that correction still necessary? Might we see a rally now? Just trying to try to understand how investors are thinking then about U.S. markets now.
Yeah, I think take that correction word a little bit of pinch of salt. 5% down day is not unusual. In fact, you usually get about anywhere between 3 or 4, 5% down moves in an index like the S&P every year. And in fact, I would argue the outlier was that we hadn't had any sort of pull back at all for a better part of 2 years. So that was, for me, that was the more unusual case. So it's just business as usual. As I said, indices are back up to where they were. For investors though, I would just sort of have a word of caution. Volatility is coming back. Things have been a little bit too complacent, and you've got to keep an eye on the numbers coming out. As I say, inflation print so far been pretty decent. We've got the Federal Reserve meeting next month. Our own SARB also meeting next month, where they are likely to cut rates, which is good for risk assets. But nevertheless, there is definitely a bit of a slowdown. We've seen those PMI numbers slowing a little bit. So, I would certainly be a little bit cautious what's coming out. But for now, that story is intact, and the markets are continuing to grind higher for now anyway.
And does the SA Inc. story fit into this thesis, Nick?
I think it fits in very nicely. I think there's a number of things. Certainly a tailwind with the administration, the current administration, the government of national unity has been very well received. We've had quite a bit of positive overseas press. And quite frankly, I think it was quite an easy thing to justify these moves up. It is because most overseas investors were underweight South Africa for obvious reasons. Transnet, Eskom, load shedding, the logistics. You name it. It's been almost not an easy investment story. But that story having come right recently, it doesn't take much to move the needle in South Africa. An emerging market fund putting $100 million to work, and they all share. It moves things pretty quickly. So how does it plan out? It plans out pretty well. I think you've seen that. You said on your intro, Rand nicely under 18 again. We often don't mention it, but South African government bonds have been on an absolute tear the last couple of months. That is a lot of foreigners buying our bonds too. So overall, for now anyway, a reasonably good story intact for an investment case in SA Inc. and on the JSE All Share.
Speaking about good news stories today, out this week, I think a highlight for me on the company news front was definitely Standard Bank, a 4% increase in headline earnings. I'm wondering what to make of that, or maybe having a more comprehensive look at those numbers, considering the macros, but also how, just the banking sector has performed this year, Nick.
So there's two sides to that. I mean, the first is the SA banking sector is certainly a very well-run business. All are doing phenomenally well. Impairments haven't been as high as expected. Obviously, barring ABSA, the rest have been pretty good earnings. They're trading on very low multiples, low PEs, very sort of attractive price to books, and earnings also not overly expensive. Dividend yields anywhere close to 8 or 9%. And you saw Mr. Shabalala coming out with those earnings, really solid set. And interestingly enough, taking advantage of sub-Saharan Africa, which is one of the few places which is going to grow sort of between 3 and 4% growth while the rest of the world slows. So that is a good story. And South Africa's Standard Bank having the largest footprint in that area. They've been a main reciprocant of it. I think all-time high today in that share price. So, congratulations all round for those results.
And then one that's not so great, but usually is, but isn't this time around, Master Drilling. They're out today, I think, warning markets that they could see, I think, headline earnings falling around 95%. That's quite a number.
It is quite a number. Look, it must be taken in context. It is a sort of a one-trick pony, very, very tied to the cyclical business of mining. We've seen a little bit of a slowdown there. I mean, just look at our general mining shares. They are the laggers of the last couple of months. So I guess to a certain extent, not unexpected, but nevertheless, it is a bit of a knock, and it's going to take a while for that cycle to turn back up again.
Then one we can't ignore at this point also is just China. Keen to get your thoughts on that one. It remains an uneven story. I think, we've all been waiting for some sort of a cohesive, coherent story where China is concerned. Nick, we're just not getting it. I'm keen just to find out where we are with our thoughts where China is concerned at this time.
Yeah, and as you said, we are waiting, and I think we'll probably keep on waiting because as of yet, we are looking for some sort of a stimulus package or something out of the Chinese government to get that domestic economy going. They've been under pressure with property, which has caused a bit of a problem. We've had a few sort of companies going under there as well. Saying that, the consumer is still sort of reasonably resilient. It is the world's second biggest economy. They had some import-export numbers this week as well, which weren't as bad. But nevertheless, they've got some challenges, that weaker yuan being one of them. They need to sort of try and manage that properly. And of course, incoming possible president, in America, which is, if Mr. Trump gets in, is talking about all sorts of tariffs on China, that sort of trade wars will continue. So in a nutshell, they've got a lot of challenges ahead of it. And we need to see some sort of, concerted effort. They've been cutting this sort of, the lending rates, but very piecemeal, 10 basis points here, 10 basis points there. That's not going to make a difference. They need to make a really big sort of stimulus package, and we wait to see. Once that comes out, we can take a second look at it. But for now, it's sort of not really a place to invest until we get that in order.
Nick, let's get into some stock picks now, maybe starting off with counters that have found favor with industry peers.
Reaffirm my positioning here on Grindrod. I think, it's nice. Industrials, small to mid-cap company poised for growth in a kind of better kind of environment for South Africa. They have a concession out on the Maputo port, which has done very well given the problems in Richards Bay and our ports. And obviously, with the transformation of Transnet, they will also likely benefit from that. And then from a company's perspective, they've done a lot to kind of clean up the portfolio. They've removed some of the peripheral businesses like the bank and one or two other smaller things, and it's not trading on an expensive multiple, single-digit PE, so I think Grindrod is a good bet.
I'm going to pick AECI Chemicals and Mining. I think that's sort of what the company's become. They, again, like I mentioned earlier in the show, like so many South African management teams sort of went on a buying spree in the US and even in South Africa in terms of some sort of water businesses and tarmac businesses, and then sort of the shrimp business in Germany. All of those things have proved less than optimal. And I think the last results saw a lot of costs related to consultancy and related to closures of units that aren't profitable. But the main business, the mining and the chemicals, are incredibly strong and incredibly well positioned with large moats economically. Mining explosives are incredibly difficult to make, and there are sort of one or two companies in South Africa that do them. And globally, AECI does compete. The chemicals business is similar. It's a fairly complex sort of industry to be in, and I think the new management team have set themselves very realistic goals, and if they were to meet them over the next 3 years, there's significant upside in the share price.
My stock pick for today is Woolies. We've seen some quite fairly soft growth from the company over the past number of years. The most recent results we saw weren't great either. I think what's positive for us about them, is it's been a tough trading environment. The food business is doing well. They've had some issues, with the David Jones stuff, but that seems to be in the past now. The company is currently sort of trading around where it was 5 or 7 years ago, you know. So I think, you know, Woolies where it's trading currently looks good. Management seems to be confident that they'll be able to execute on its strategy, focused on capital discipline, you know, driving shareholder returns. So we think, yeah, these levels are quite good to start nibbling there and on Woolies.
All right, Nick, very interesting counters we have here. Grindrod, AECI, and Woolworths.
So let me concentrate on Grindrod to start with. I share the sentiments. I think it's a very nice SA Inc. play, and certainly the commentator mentioning the fact that, you know, the likes of Transnet coming right, the logistics doing better. Ironically, a lot of slack that was taken up from the trials and tribulations that we saw at Durban Harbour, for example, and Richards Bay was taken up with Maputo. You know, Grindrod is a partner in that business with the Mozambican government, and doing extremely well. I mean, I must say I preferred the stock at 10 Rand a year ago. It's 15.50 of this morning, so it's really at a decent bounce. But I take his point. It's actually still not even that expensive, and I certainly think they've got more legs to go in that one. So I do like that count as a SA Inc. play, and just a general play on the economy. Certainly getting more towards a 2.5% growth we can hope for in the next sort of 12 to 24 months.
Well, that's it, Nick. Which counter are you loving this afternoon?
So I'm actually going to go with what we chatted about earlier, that Standard Bank, even though it is at an all-time high. I think it's a great proxy. You know, financial markets and certainly financial shares tend to lead markets up. They tend to lead markets down. Bond yields having a nice sort of bonds having a nice run in South Africa. The Rand looking good. Mr. Shabalala is talking up quite a good story of Africa, and I second that. I think even at these current levels, I think something like a Standard Bank is a must-have in anyone's local counter.
Brilliant, Nick. Absolute pleasure having you wrap up the week for us. Have a great weekend. That was your midday markets update with Sanlam Private Wealth, Nick Kunze.